quick. Hey everyone, happy Wednesday. Hope you're doing well. We'll go ahead and just out of respect for everyone's time and all that, we'll get rolling. Really appreciate Branden, logging in and sharing. He has I guess, presentation he'll go through. I think some of you guys are familiar with funds and fund managers and all that. These guys are, this is all they do, each and every day. And so thought it'd be great to bring them on. And Hayden and I are just excited to have you, Branden. And Hayden, anything else you want to mention before we get rolling?
Just want to thank everybody for joining, and especially Brandon. He's with Tribevest, and Tribevest is one of the more well-known names in the game. So we're excited to have him here,
Mhm.
and looking forward to all the information that he has to share. So I'll turn it over to you, Brandon.
Yeah, thank you, Dustin. Thanks, Hayden. I appreciate you all having me here and have really enjoyed working with you and our partnership thus far. And so excited for continued growth on all fronts and excited to be here with everyone that's joining the webinar. And like they said, I am from Tribevest and I've got a short presentation for you all today, and then we'll jump into some Q&A. Usually it's, there's lots to kind of unpack. And in this world, we get into various terminology and things that can cause confusion. So, want to definitely get your questions and be able to answer those to the best of my ability. So, I'll start here and share my screen, and we can jump in. So yeah, we're going to be talking about making capital partnerships safer, faster, and more scalable. And what we're talking about is just leveraging the fund-to-fund structure, which Trivest didn't invent, but we've made it 10 times easier and 10 times, more affordable and efficient. To leverage that structure in our process and platform to help raise capital for great private equity or private real estate deals like Momentum Multifamily has. So just a quick disclaimer. First of all, I'm not an attorney, I'm not an accountant, and we are not providing any kind of legal or tax advice here. This is just for information only. You can read this disclaimer quickly as well. And just want to share that first before we dive in here. So I'm the Vice President of Strategic Partnerships for Tribevest, and Tribevest is a venture-backed startup that provides the back office and banking infrastructure for the private investing world. Right. So in our initial offering in this space, so we're planning on growing quite a bit, but this initial offering is a turnkey fund-to-fund structure that allows people like yourselves to safely and efficiently aggregate capital, again, for great private deals that are out there, like the ones they have at Momentum Multifamily. So we'll be diving in to that today. And our strategy to make this as efficient and easy as possible, again, when folks like yourselves want to come out and aggregate capital for these deals, is we partner with folks like Momentum so we can take care of a lot of the work up front for you and figure things out at both a partnership level and a deal level before you come in. So everything is kind of figured out, as many of you experienced either as an LP or maybe raising capital yourselves. And I know Dustin and Hayden certainly know this, but there's a lot of things going on when you're in the urgency of that raise, and you don't want to be trying to figure all this stuff out at that point, right? So one, we're helping to figure some of the things out up front. And two, you've got a partner in Tribevest that's helping you with all the things that go in to creating a fund to fund. There's an entity aspect, legal docs, banking, but again, all of that's handled by Tribevest. So you get to focus really on your investor network and raising the capital for your fund to fund. So In terms of an agenda today, we'll be talking about, why this program matters and how it helps you and some context in the market, what it means to be a capital partner or a fund manager or capital aggregator. There's lots of terminology out there, but they all pretty much mean the same thing. So we'll talk about that. We'll talk a little bit about just kind of how the program works and how, again, we partner with lead sponsors to help it make it more easy for you to raise capital for their deals. And then just how to get started if you're interested in learning more or moving forward. So this is probably the path that maybe most of you are familiar with or on today. You find a deal with a GP, you write a check and come into the deal as an LP. And hopefully you're, maybe doubling your money by the time the deal comes full cycle. And it's extremely passive, right? And pretty straightforward. Obviously, there's due diligence and things involved, but again, a pretty straightforward process. And being a passive investor is amazing, and a lot of people just kind of stay that course as they kind of have their journey in real estate. But a lot are ready to do more. What if you're ready to do something above and beyond that? I know a lot of people are interested in, maybe leveraging their existing networks that they've built to raise capital for deals. And I know some are even interested in taking that big leap and becoming a syndicator themselves and doing their own deals. But I think Dustin and Hayden can both tell you that that's a huge leap. And there's lots involved there beyond just the capital raising part. And so one thing we always say to most people is, this is a great step forward. And if you can kind of conquer the world of raising capital, that kind of puts you on a good path if you are interested in doing your own deals one day. Or we've created this structure and made it so easy that you can stack deals with Tribevest and with other lead sponsors and with momentum and really build a capital aggregation business if that's what you choose to do. So, pre-Tribevest, there was capital raising's been out there. And a lot were leveraging the co-GP model to bring their investors into a deal. However, this model was problematic. And if you raise this way, you probably experience some of the headaches that come with it. And if you're doing this right, as a co-GP, you're required to do much more than just raise capital for the deal. And frankly, what has happened is most people as co-GPs that are raising capital just don't meet the criteria set forth by the SEC. And so this model is really constantly under scrutiny from the SEC, and especially when it comes to compensation for raising capital, right? So that's one of the biggest issues with the co-GP. The other one is as you get into the capital aggregation game and you're building out your investor network, you want to be able to protect that network and not just be handing investors off to the GPs and operators that you're working with, right? So you want to protect that network as you build that out. And in the co-GP model, you're not able to do that. In the fund-to-fund model, you are able to kind of protect it and create an entity when you're bringing investors in, which is a huge benefit, again, as you continue to grow in the capital aggregation space. So the question becomes, how can you raise compliantly while protecting your investor network and compensating yourself for all of your hard work? Well, you can do that via, excuse me, my punchline here. Via the fund-to-fund structure and you coming in as an independent capital aggregator as opposed to a co-GP. So as an independent capital aggregator, you can pool capital from friends, family, colleagues. And these are all folks that, one of the great things is you're able to, these folks who've never really known about this deal if it wasn't for you, the aggregator. So you're really, adding tremendous value just by bringing the deal to them. Like I said, you can also scale and protect your network in this structure. And you're not just handing off investors to the lead sponsor. You're also able to really professionalize your capital raising with again, a compliant structure. We'll get into this more in a minute, but you are creating a separate entity, an SPV. You are creating a separate bank account, and you're also going to have your own offering docs that your investors are going to be signing. It's all specific to the deal of the lead sponsor, but you are, again, creating your own offering docs and managing all of this with the help of Tribevest and our platform in a way that really kind of professionalizes your capital aggregating. And the nice thing is, you're also able to, participate in preferred economics. So typically you're raising $500,000 is probably the minimum, maybe $1 million or more through these fund-to-fund structures and your investor network. And so you're able to get preferred economics above and beyond what you would typically get as a retail investor writing a $100,000 or $50,000 check, right? So, and we'll talk about that because that's an important part, right? Is why do you want to do this? Is because you can, safely compensate yourself within the fund-to-fund structure. And so we'll talk some more about that. So here's a quick snapshot of what the fund-to-fund returns might look like in a typical syndication deal. And what's nice with Tribevest, when we partner with someone like Momentum Multifamily, and one of the most critical parts that we handle up front is figuring out the fund-to-fund economics and providing an example for the capital aggregator. So they really are making an informed decision. And so what I mean by that is that, the fund-to-fund economics, what that means is you're receiving, like I said, a preferred term for writing $1 million. Your entity, your fund-to-fund is writing $1 million check, let's say, to get into, Momentum's next deal. And in return, they're offering you a preferred term above and beyond what a retail investor might get. And then the question becomes, how do you leverage the delta between those two? Because you're going to now, in turn, offer certain terms to your investors within your fund-to-fund. You're going to charge certain fees for managing your fund, both upfront and annually over the course of the deal. And how do all those things come together within those fund-to-fund economics so that you can understand, well, what terms am I going to offer to my investors? What returns should they expect within the fund-to-fund structure based on the underwriting of the deal? And what will my compensation look like? And that's, super important. If I'm going to be raising $500,000, $2 million for a deal, I want to understand, based on the projections, what is my compensation going to look like? And now I'm making an informed decision, based on that data versus just getting that preferred term and trying to figure out what you think how you think things might unfold. This also becomes super important because figuring out the terms you want to offer up front, figuring out those fees that you're going to charge, and we have some very simple fees in place that's already part of kind of our turnkey fund-to-fund structure. So you don't have to think too much about that stuff. But you also know those coming in before you've been handed off to Tribevest. So we know exactly what we're going to disclose in your offering docs when we get you all set up. So all of these things are meant to inform and get you the information you need up front and to create efficiencies downstream, because these are the things we identified as some of the missing pieces in making this fund-to-fund structure truly turnkey. So if we walk through this a little bit, like I said, this is kind of an example of a $500,000 fund-to-fund going into a syndication with a 5-year hold. And so you can just kind of get a sense for these are the overall fund-to-fund returns, right? This is the capital aggregators revenue, right? So a combination of fees. So these are an annual fee charged up front. This looks like it's about 0.25%. It looks like it's 2%, 2% up front, and then 0.25% annually in terms of fees. And then the rest is coming on the promote. And then we also, what's nice when we put together these economics, it includes your Tribevest fees, so your costs as well. So when you look at, how much are you going to make for raising $500,000, again, just in this example deal, that's including these costs. Again, back to that, trying to make it easy for you to make an informed decision and not have any mystery about, well, what's going to happen downstream. Am I going to have, costs that are going to pop up? I've heard you have to handle accounting and K1s and things like that. One, those are all handled for you. And two, we've accounted for those costs here so that you really have a true view of what the opportunity looks like. So, I think another thing to think about is, for some, they may want to try this once, but for a lot of the folks we work with, we have, a physician that's raised capital with us on, I think, over 15 deals at this point in the last 2 years. So he's really built truly a business out of aggregating capital for a wide range of deals. And so this is just a snapshot to look at, what does it look like if you're doing, multiple deals over the course of a couple years. So this example is if you're raising $1 million in the syndication deal, for example, and doing one deal per quarter for 2 years, right? So you can see that this adds up into something that could be a nice something that's adjacent to your W-2 or even replaces your W-2, depending on kind of where you're at in kind of your stage of life and how much you're interested in getting into real estate in this way. So, but you can see just with some simple math that the opportunity is there, again, without having to syndicate your own deals and with a lot of this done for you via Tribevest. So, like I said, so with Tribevest, we really want to account for all of the stakeholders here. We partner with the lead sponsors, like I said, to figure a lot of this stuff out up front. So when the deal comes, we're all ready to go. And when you raise your hand and say, I think, Dustin, that I can raise $1 million for you, again, we've already got that path figured out. We've already got those fund-to-fund economics figured out for you. So you're making that informed decision. And then when you're say, yes, I'm ready to go, you're handed off to Tribevest, and we're going to handle that fund-to-fund formation for you, right? So we're going to open a new LLC specific. This is an SPV, specific LLC for this deal. We're also going to open a bank account for you so you can aggregate capital from your committed investors. We're going to assign an account manager to you that's going to help you with investor onboarding. So that someone's going to help you get all the signatures on your new set of offering docs, someone that's going to help get those wires into your account. And then once that capital is aggregated, a single wire is going to go off to Momentum. And now your fund of fund is an LP, a big check writing LP on their cap table. So you're going to be getting a single distribution back from them, and you're going to be getting a single K1 back from them. And we're going to help you break those up. So we're going to create a cap table for you on our platform, push those distributions out to your individual investors. And we're going to do the same things with the K1s. And it's all included in the offering, right? So you're going to get a single K1. We're going to break those up, push them out to your investors, and we're going to handle all your tax filings as well. So a truly kind of all-inclusive package. There won't be any surprise costs that pop up along the way. So we really have kind of that peace of mind, even though, a lot of these deals go 3, 5, sometimes 7+ years. We've done this quite a bit. We've worked with over, probably close to 200 capital aggregators at this point across 30+ different lead sponsors and, 50+ different deals. We've set up, 200 fund of funds, and about $100 million plus has been raised across those fund of funds for our lead sponsor partners. So, like I said, we didn't invent this fund of fund structure. It's been around. There was just a lot of challenges that I talked about early. If you're trying to, again, if you're trying to do this on your own, go open your bank account, go find an attorney to create your offering docs. Again, just not understanding all the mechanics. It's really hard to do, especially within that urgency of the deal. So we've really smoothed that process out. And we've also lowered the cost considerably. So again, going out to your own attorney could cost you 15 plus $1,000 for a set of your own offering docs, and take a lot of time as well, right? A lot of back and forth there. The setup can take, weeks, right? And we do this in a matter of days. So once you've committed to raising capital for a deal, you're handed off to Tribevest. We have you complete a worksheet for a fund-to-fund worksheet. And when that's completed, you sign our service agreement. And from that point forward, in 7 business days, we're going to have your new entity set up. We're going to have your bank account set up. We're going to use the articles of the organization and EIN number to open that bank account. We're going to create your offering docs for you. And again, you'll be ready to bring your investors in. And, in parallel, you're out talking to investors and getting soft commitments. And you're going to be ready to bring your investors in 7 business days to have them sign docs and wire capital into the deal. So again, even when you have that urgency of a syndication deal that's, maybe only has 4 or 5 weeks, we're still able to accommodate that and work within that kind of those tight timelines. So just a little bit more, I've kind of talked through this, but all the things that are included, just important to note there. So the entity formation, offering docs. We also do your blue sky filings. So some of you may be familiar with those, but that's another aspect to this, is you do need to file at the state level, depending on where your investors are coming from. So depending on their state, we need to file a blue sky filing with that individual state. And so we handle that for you as well. Like I said, banking services, investor onboarding, and everything through to the dissolution of the deal. And you can see here just the pricing scales on an annual basis, depending on the number of investors that are coming in. Again, we're handling all the tax filings and breaking up those K1s. So those accounting services is what creates kind of the increase in cost as we add investors to your fund to fund. So yeah, let's see. So, how we're able to do this so efficiently is that we have a process. Like I said, we've done 200 plus fund to funds at this point. So how do we do that so efficiently in 7 business days? Is we have a process that we've been refining and iterating on for over 2 years. And we're just really kind of experts at all of this back office and banking and legal services that frankly, a lot of people don't like doing, but that's really where we've leaned in and really we love this stuff. So it allows us to do this again extremely quickly. So we're going to just ask you to complete the worksheet, as I mentioned, and sign our documents, giving us the go-ahead to get started. There's the $5,000 setup. And then, we have a kickoff call with an account manager. So you're really informed on what what we're doing for you, as well as what's going to happen next. And again, a lot of this information is also pushed upstream so that, Momentum and Dustin Hayden can also give you a little bit of a heads up of what's coming and what the process looks like as well. And we have documentation and videos and things that you can watch. So again, there's no mystery as you kind of come into setting up your fund to fund. So your account manager is going to meet with you, and then we're going to file your LLC. Like I said, obtain that EIN. We're going to create your fund to fund, or tribe as we call them, and open your business bank account. We file a Form D. So this is a 506C structure that we're setting you up with, and we're going to file your Form D for you. And then we start your onboarding process and drafting your offering documents. And now you're ready to start receiving investors. So you'll meet with your account manager again to just talk about bringing in your investors. So again, everyone's on the same page. We know anyone that's raised capital knows how important it is to keep investors as happy as possible throughout the process. It's usually, it's quite chaotic as you're kind of bringing people in. And so you want to keep them happy. So we want you to be on the same page as your account manager. So you have this pre-raise call, and now you're ready to get things signed and wired. We also collect accreditation letters on your behalf if you need to, and then onboard your investors, create your cap table for you. And now it's ongoing administration. Now this wire capital's been aggregated, wire's gone off to Momentum, and now you're ready for distributions and K1s, and we're there to support you for the life of the deal. So again, pretty simple how it works. The deal is ready. You commit as capital aggregator to come in as a capital aggregator and through a fund-to-fund structure. You get handed off to Tribevest. You're starting to socialize the deal with your investor network. We get your entity set up as I described, and then ultimately we're going to funds are wired to that lead sponsor. So in this structure, like I said, we want all stakeholders to win. This is great for the GP, like Momentum. They're going to get a single check and treat you like a single line on their cap table as an LP. They only have to worry about a single distribution, regardless of how many investors you have in your fund of fund. And they're doing a single K1. So it really simplifies things for them. And in turn, they're willing to offer you preferred terms, right? So that's kind of the trade-off there. And then as a capital aggregator, you're able to make passive scalable income compliantly in this structure. You're continuing to expand your network, and you're really helping these investors. I think that's an important part. You're a real conduit to your investor network. Most people, if you ask them about, different private equity or private real estate investments, they just don't have access to them or know about them. And so you're really doing a service when you're, bringing these opportunities to them with great lead sponsors. And then for, those investors, your investors that come into your fund of fund are getting passive returns. There's an opportunity for diversification. You can do all sorts of deal types with this fund of fund structure. Many of them have tax advantages. And these are exclusive deals. Like I said, that people aren't getting access to without you playing that capital aggregator conduit role. So that's a real win for your investors. So in terms of becoming a capital partner, you can book a call with Momentum and talk to them about how their program works and, any questions about what we talked about here today. Once there's a deal live, you just have a conversation about what you think you can raise, either based on past experience or just kind of based on what you think and what your investor network looks like. And then you're handed off to Tribevest once you're kind of committed to move forward. And we set you up so you're ready to raise capital, and everyone's happy. And that's all I got. I know I wanted to leave plenty of time for Q&A before the end of the hour. So love to open this up to anyone on the call, or Dustin, Hayden, you tell me what's the best way to
Uh,
structure that.
yeah. Yeah, I guess if anyone has questions, feel free to unmute yourself or put it in the chat. We would love to hear from you. While we have Branden, I mean, he's an expert in this field. So, um, anyways, but I guess while we're seeing if there's any questions, I guess I have a few. So as a ICA or fund manager, is there just through this model, is there any depreciation available?
There is.
Okay.
Yeah. So you can offer it. It does require some specific things set up, having on both the deal side and on the fund side. But yes, that depreciation can pass through.
Okay. Gotcha. Um,
I have a question. Brandon, thank you for going through that. Todd Bailey here. Do you need any sort of broker-dealer license to be a fund manager?
You do not, right? So that's where I think the exemptions that we're filing come in, and the structure itself and some of the separation that's created, right? So again, you're creating your own 506c. We are filing state level those blue sky fines, those state level exemptions on your behalf. Um, I think the really important part is that, that SPV entity that's being created, you're just an LP on Momentum's cap table. So there's no direct compensation happening. It's all just, you're a big check writing LP on their cap table, and they're providing you with preferred terms. And then the fund to fund structure is where you kind of you leverage those preferred terms to find your compensation. But there's nothing happening directly, and there's no decision making happening here. You are the conduit, and you're bringing this deal to your investor network, but you're not. This isn't a fund structure where you have multiple deals and people are investing, and you're helping them make a decision about where they should and shouldn't invest. So really removing that decision making and having these all as SPVs that are from the get-go. Everyone knows exactly where this investment is, and all of the disclosures at Momentum's level, for example, all flow through. So everything's is really geared towards this not being used by an RIA or broker dealer.
Thank you. Different question. You mentioned that these are set up as 506c offerings. Have you had interest from your current clients to set up 506b fund?
Yes, and there again, I'm going to clarify all this, and I'm not an attorney, so this is all just kind of based on my experience, and you can talk to your attorney if you want some more information. But based on our experience, yes, with the 506b. So one, whatever the target deal is. So let's say more if Momentum was doing a 506b syndication, that would be the first requirement, right? So that the target deal needs to be a 506b for the fund to fund to be a 506b. The other aspects are one, right? They've got as a 506b, they have their 35 non-accredited investor slots. And typically, most attorneys believe that those would pass through, even though they're coming through through the fund to fund, meaning that if you have 6 non-accredited investors, that'll count towards the lead sponsor's 35. So that's one thing, is are they willing to kind of give up those spots to their fund managers? The other thing is there's also, there's quite a few rules from a marketing standpoint and how you can, position the deal out in the world. And so again, for safety reasons, we usually go with the 506c and accredited investors because it just avoids any of those complications there. But again, if on a deal by deal basis, we've certainly done some 506bs as well.
Yeah, thank you. I think you're right that the limit of 35 506b investors would pose a big challenge.
Right. Yeah, unless it's really clearly communicated up front, or a certain number of spots are designated or something like that. But it's something you have to just work through with the lead sponsor.
Thank you.
Sure.
And I wanted to just kind of jump on that question, just for at least our experience. Because we've done a bunch of 506bs, and I don't think we've gotten kind of close to that 35 limit, but we've never actually hit it, just for what it's worth. So.
Hey, can I ask a question? This is Richard Hall.
Yeah, absolutely.
Sure.
Hey, Brandon, this has been excellent. I really appreciate getting a general understanding on this. I have probably a lot of questions, but just to narrow it down, Can retirement funds, self-directed, invest through this without any additional problem? Or if a very kind of a whale type investor comes along and wants to get a better deal, you'd go back to the GP, I guess, to structure this. Some of this happens, I guess, at the capital partner level, and some would happen in conjunction with the sponsor target GP decision making.
Yeah, so yeah, a couple of things in there. The first on the retirement accounts, the answer is yes. So one of the things, if if you're working with us and we provide you, with a soft commitment form that you can use, or they're soft committing on our platform, one of the questions that's asked is if they want to come in as a self-directed IRA or self-directed 401k. And those are fine to come into the fund-to-fund structure. So yes, if you wanted to aggregate capital and a number of your potential investors wanted to invest through a self-directed IRA, that is certainly possible. And we do, work with you to facilitate that with the different custodians and things like that as well. So we're very well versed in kind of how all that goes down and how various custodians work. Now the whale check writer. Give me a little bit more like what's I think I understand what you're asking. So right, so there just something, I think, a general statement. So Tribevest we do this extremely efficiently, very quickly, affordably. In order to do that, right, we want to keep this in our box and within certain guardrails. And so that's kind of a general statement. So I guess my point is that everything I say isn't specific to any fund-to-fund out there. You can certainly go out and work with an attorney to create a fund-to-fund on your own and have all sorts of levels of customization to it that maybe Tribevest wouldn't do. But again, for probably a lot more cost and a lot more work on your own, and then you really don't have someone that's kind of managing it for you. So we offer this kind of turnkey offering in a box, but it's a much more simple structure. And my point with all that is part of the efficiency is also figuring some things out up front, like leveraging an established preferred term with the lead sponsor. So the lead sponsor is offering an established preferred term to you, and then you're going to create specific terms for your investors. And it usually starts with a single set of terms and waterfall. That being said, you could create a second waterfall within your fund-to-fund structure and to offer something to a larger check writer. So again, I'd say there's not a ton of customization, but at the same time, we've worked with all sorts of different one-off scenarios from our capital aggregators. And yes, there's some combination of accommodating your investor types in the structure and some negotiation with the lead sponsor. Yeah, I don't know if that helped at all, Richard, but.
Oh, no, it was very helpful. I think there's always some variations in any process, so I appreciate you trying to address that and understand it kind of could be worked out with the GP sponsor in general. I did have a follow-up question, not related, but in terms of how the capital partner presents the offering and how the administration goes through Tribevest, is it pretty much transparent to how the GP is marketing their property, or do you create a separate landing page with obviously the waterfall that's being offered to the capital partner? And if, say, the GP is using a certain platform for their syndication, sending out K1s and back office kind of things, does that flow through the Tribevest, or do you guys have your own platform portal that way?
Yeah, it's a great question, and we're actually in the process of launching a new version of our platform starting next quarter. And so what that looks like is the lead sponsor launches a deal, so to speak, on the platform. So they're uploading things like, imagery, the deal, specifics of the deal, everything you would see in a typical kind of investor portal deal page. And then also providing you with an example of what your fund to fund would look like. So to answer your question is you're able to take that as a capital aggregator and in turn set up your own deal page, leveraging all of the assets and copy and terms that they provide to you, and push that out to your investor network on the platform to get their soft commitments, and then ultimately for them to wire and
So the Tribevest relationship really starts at the GP level. It wouldn't be that as a capital partner, I can go to the GPs and say, "Hey, I can raise $1 million for you for a fund of fund I'm going to create with Tribevest." It would be the GP first setting their offering up through Tribevest and then allowing capital partners to come in.
No, great question. So our go-to-market strategy, and to do this efficiently, is certainly and focused on working through our lead sponsor partners, the GP partners that we have. And again, just because we've done all of this work kind of upfront, it makes it much easier for you, the capital aggregator, to come into this deal. However, one of those exceptions that we kind of talked about, Richard, is yes, if you want to bring your own deal with a GP that's not currently or hasn't worked with Tribevest in the past, we do have a path for that. And so they'll just provide us with offering docs. They'll provide us with, we'll need to work through some of the fund to fund economics and some things that have a little bit more nuance to them. But yes, there is a path there. And certainly as, again, we're launching this new version of our platform, and as that rolls out and evolves, there'll be much more focus on that kind of fund manager, capital aggregator, direct deal type. But just as you can imagine, as a smaller startup, it was just much more efficient, and we could really impact the space a lot more by partnering at that GP level.
Great, thanks so much.
You're welcome. Appreciate the questions.
I've got a question too. You'd mentioned that you've worked with a physician that's done quite a few of these, 15 deals in the last, I think you said 2 years. What do you think helped separate them from somebody that maybe has only done one or two in that same time frame? How are they able to scale so much more? Is there certain strategies or steps they took to be able to get to that level in that time frame?
Yeah, good question. And certainly, I guess when you have anyone that's kind of exceptional in anything, they're usually an exceptional person. So I think there's a lot of hard work, determination in him wanting to really do this at a much higher level. So I think definitely starting with that. But I think again, I think a lot of it has to do with the process that we've put in place, right? So, I mean, if he had to go out, and work on creating an LLC and opening a bank account and working with his attorney, I think it would be tough to do more than a couple deals a year, especially if it's not your full-time role. So, by the way, this isn't even a full-time job for him. He's a physician, so he still has a practice that he manages on as well. So I think the efficiencies created in the structure. I think he's extremely active. He attends lots. He attends Best Ever Conference. He's a member of Raise Masters and other communities. He goes to he meets with a lot of lead sponsors. I think he's also able to while we don't have a marketplace where we're connecting capital aggregators and lead sponsors. I think he's been able very organically to, we have events that we go to. We have our lead sponsors hold events. He attends those events. I think just a really high level of activity and determination to meet new lead sponsors. I think as as his reputation has grown within his investor network, I think he came out of the gate with a couple of land deals that were not only successful, but had some quick returns, right? So you get like some 18-month or 1 year timelines and immediately are getting some cash flow and distributions. I think that helps with confidence. And so as he grew, one thing that he found was just like, that his investors had different needs, right? Some were looking for deals that could provide, more cash flow heavy. Some were needed tax depreciation in Q4. So he really started, looking to have a breadth of deal types to accommodate what his investors were looking for. And I'd say the other thing is he is an extremely savvy LP himself. He had been investing in various private equity and real estate deals for over a decade prior to him raising capital. And so he can really he's been in their shoes, and knows what are all the different things I'm looking for as a passive investor. And so I think he really has speaks their language, so to speak.
Awesome. What kind of going back to the question that I think Todd had kind of on the 56B stuff. Just for clarification, can I guess, are you guys set up to where you can go into 56B deals at all, or did all the deals that you're going into need to be C?
No, so at the target deal level, they can be 506B or 506E
Okay.
or a fund. The fund of fund is, I'd say, generally speaking, quite flexible in terms of being able to set it up how we set it up and go into a number of different deal types. I don't want to the 506C and 506B. I'd say where some of the nuance comes in is when we're talking about funds that have very or more complex structures in terms of multiple tranches and net asset value and you know decision making on behalf of investors and whether they want distributions or they want to reinvest. Like when you get into funds that have a lot more, complex structures, then a little more thought needs to go into how you set up the fund to fund. With the 506B and 506C, both are fine. It's really just about, at the fund to fund level, you need to have a 506C can go into a 506B or a 506C deal. A 506B can only go into a 506B, and have those restrictions, the marketing restrictions and requirements that you need to meet, and then the 35 accredited investors need to be accounted for as well.
Cool.
Or non-accredited, yeah.
Awesome. Sounds good. Any other questions for Branden? I had just another kind of question as far as on the fund manager side. So typically when do you guys, obviously you guys are doing a ton of K1s for all the fund managers and all that. When are you guys typically trying to get those out the door?
So we turn around K1s in about a week.
Oh, wow.
But we are, of course, dependent upon the lead sponsors getting
Sure.
that
Yeah.
first K1. But once we get that, we turn it around in about a week. So we're able to break that up and send it out to the investors. So we've been doing this fund to fund structure for a little over 2 years now. But the back office piece, our first offering in the space was tied to joint ventures and allowing people just to kind of not with a single capital aggregator, but people come in as a group to invest. And so all that back office infrastructure was already in place and the ability to kind of turn around K1s and create cap tables. So we've been doing this, generally speaking, since 2019. So we've got a lot of those
Oh, wow.
structures and processes in place, and turning around K1s and things very quickly has been something we've been doing for years.
Yeah. One thing I just wanted to mention for the audience and all that. So all that timeline of all the things that you guys do and all that. We're having to do that on our end, and we're having to go to multiple people and all. Anyway, so they just want to give kudos to you guys that they're Tribevest is taking a lot of work off of you all because it is we've worked with the same people over and over, so that helps. But it's still we're having to go to multiple people, and it is work. So yeah, so kudos to you guys.
No, appreciate that. And yeah, that was the goal, is it takes a certain level of structure and work to do this safely and compliantly. But the good news is that Tribevest takes, almost all of that off your plate, and does it for you again, efficiently and really affordably as well. So a great
Awesome.
opportunity. I was going to ask, I know we have a few more minutes before we jump. If I don't know if just any feedback from the group on if they've raised capital before, as if anyone's used the fund of fund structure, if they've raised capital for deals, or just any any feedback around experience of the group in this world.
No experience yet, but something I'm eyeballing for the future.
Awesome. Yeah, would love to have you
I mean, the fund of funds uh, setup.
for sure. For sure. Thank you, Todd.
Awesome. Yeah, I know there's been a few other people that were on here that have been active as well. So
Great.
awesome. Well, cool. Yeah. Well, I don't know if there's anything else for Branden before we let him go, but in Branden, if there's anything you kind of want to end
Oh,
with, or if you want to give contact information, website, whatever whatever's best for you. So
yeah. I mean, I think again, if you can go to tribevest.com if you want to learn more. You can learn, both. If I don't know if you're, a GP, or if you want to be a capital aggregator, there's kind of paths for each there. So you can go to tribevest.com and learn more there. And honestly, we do always want to support our partners in like Momentum as well. So if and back to the question from Richard earlier, that really is the best path, is to have a lead sponsor like Momentum with a deal that you want to raise capital for, because that, at the end of the day, that's really the most important part. We want to remove all the concern around the structure, but finding that great deals, right? That's where this all starts. So if finding that great deal is really the starting point, and then we'll have it all figured out for you up front, so that when you get handed off, we'll help you create that fund to fund structure. So again, I encourage you to go to Dustin and Hayden to learn more about their specific fund to fund program.
awesome. Yeah, really appreciate your time, Branden, as always, and great seeing you. And yeah, look forward to working more with you very soon.
Yeah, no, thank you, Dustin. Thank you, Hayden. Thank you to everyone that joined today. And yeah, look forward to seeing you all down the road.
All right, sounds good. See ya.
Thanks.
Take care. Bye.
Yeah.